Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, April the 1st, the year's 2021. Let's talk trading. It's time for the monthly open. And just so you know, it's Good Friday, and today's trading so far has been very sparse. These videos are for educational purposes only, and your results may differ from mine. And since we are near the beginning of the month, just another reminder, each and every trade, have your risk management in place so you don't lose any more on any one particular trade than you are willing to lose. When we look here, let's put up the weekly chart. You can see we're up for the week, 31 pips above the open. All the weekly gaps have filled. Yesterday we put in the opening range for the week right here. We are in the opening range we put in the opening range for the month yesterday. Looks like we're going to end in the opening range for the week unless something happens in the next few hours. We are 179 pips above the yearly open. We are we're inside two inside bar ranges. The daily inside bar from 19 days ago and the weekly inside bar from 2 weeks ago. And let me just show you that inside bar from 2 weeks ago. We're back in that range. So once again, horizontal line traders can trade that breakout. The range on Good Friday here is it's just not really that much. Not a good day to trade. We've missed the pivot here. Buy zone traders, as you can see here, you had to take your 1 or 2 pip profit and be happy. Rat zone, not on a day like today. The range, even though it's too low, even though there's separation between the zones, it's just too low. Basically, there's no reason to trade here. We missed the pivot once again, but we did take out the monthly pivot. So we still have that missed pivot from last month. We've got 2 back in February, and so far we've got now 1 in April. Wick zone traders were rewarded, but once again, maybe 5-10 pips, but price comes into the wick zone, doesn't like staying in the wick zone. The ranges, we haven't moved the needle on the day or the week or the month here. Just haven't. So we'll look to see for these ranges, at least on the monthly, to expand. Today, not so much. Wall mall method traders, you were paid off, but you had to be quick and take a few pips when you can, because it seems like the traders are taking the day off. I think it's bank holiday Friday, Monday over in England. Now, yesterday I may have confused a few of you. I released the batch 4 of the donational indicators, and so maybe I can clear up some confusion. So first I'm going to show you the order block bar indicators that I wrote. Now actually the indicator that's on the screen is the order block indicator. I think that was released I know it was released in an earlier batch. And what this is doing, it's showing the order bar setup. So you can see here, up here you have a bearish order block, and down here you have a bullish order block. And how I define order blocks. Let me expand this. Right here, there is a bearish candle. Then it's followed by a bullish candle, where this bullish candle this bullish candle's close is above the bearish candle's high, in this case, just by a hair. Now let me switch time frames and see if I can find a little bit better some better examples here. Okay, in this case, this bearish order block is formed when you have a bullish bar followed by a bearish bar where the close of the bearish bar is below the low of the bullish bar. And then back over here on the bullish order block, a bearish bar followed by a bullish bar where the high is above, the close is above the high of the bearish bar. That's how I define these order block setups. Now, what I'll do is I will turn off the order block indicator because it just looks for basically the highest and lowest order block, whereas the order block bars indicator will show you all those order block setups. So you can see here, you have some bullish setups. There's a bearish setup. And you know, it looks like I might have the colors reversed on the order block. Let's see. Bear block should be orange red, and the bull block should be orange. There we go. So that's the order blocks. Now, the next one is the imbalance. And I'm more excited about the imbalance because it has a very clear definition, whereas the order blocks, and somebody said they could sense my frustration, not so much. So I just basically had to pick my own definition and use it. Now, on these imbalances, what they say is that only institutions can make price move like this, that the retail traders don't have the strength to move price that much. There may be some truth to that, but with these order blocks and with these imbalances, they're telling a story. And what I mean by that is they're kind of making things up, and it sounds convincing. But to me, I'm more of a statistical kind of guy, and no, I haven't written any statistical indicators that have anything to do with order blocks or imbalances bars. So let me just put that out there. Most of the things as far as imbalances and order blocks for me, it's based on observation. And one thing I have observed, and Walmal's been working with me on it, is how price seems to react in these areas. And what happens in these imbalance areas seem to be a magnet, meaning, or have a gravitational pull, because price will move away and then it'll move back towards it. And when it gets in these zones, it's almost like a wick zone trade. It usually gets rejected, and highly rejected. And sometimes even if it gets close, like up here, price got close and then rejected. Now, there's something you have to understand. This is the chart on one broker. If you have a separate broker, this zone might be just a little bit bigger or a little bit smaller. It might be up a couple of pips or down a couple of pips. So when you see something like this happening, if what somebody's saying is true, the story about these imbalances and order blocks is true, well, you can see, yeah, it got near this imbalance area and it got rejected. See, once again, you have to understand one thing too about these. This is where it's created, and then this is where the reaction happens. So this is a 3-bar pattern right here that creates this imbalance. So when price gets back near it, you see how it got rejected, near it, rejected, near it, rejected. And that's what we're looking at. And this is on a daily. And as we drill down, you can see what happens here. Price came into this imbalance zone right here and got rejected. And that's what we're looking for. And as you can see here, you know, price got into this imbalance area and got rejected. So how we're using these is as targets. In other words, there might be a setup, maybe it's a DSR trade or a wall mall trade, and then we see price get in here, and if it struggles or stops, we just get out. We'll take our 1 pip or 10 pips or whatever there, because we know pretty much what's going to happen next. Now, some people would say, well, right here, see, I can see this right here. This is an order block. So we're on the H4. If we shift back, we shift over to at least it looked like an order block. Maybe it's not. Oh, I think I know. There's a lot of different settings in here, so that's probably why it's not displaying. Why isn't it displaying on the H4? There's some setting in there, I guess, that's not displaying it. But you can see here, once again, how price got rejected. And then and lots of times we're trading on the M1, using the M1 time frame. So you can see here we had this imbalance. Price moved way away from it, came back to it, got rejected, and pushed back down. And you can see here how this has happened. It just seems to happen repeatedly. And this is how we're using these indicators. And once again, it's something that you have to observe, and we're still working on putting together a method around it, as Walmart likes to say. And so probably during the rest of the month, we'll be working on that, developing it, and, you know, making videos about it. And one thing I have to caution you with these indicators here is if you set these the shift areas or the bars up high, it can slow your computer down, especially if you put them on multiple charts. So I will caution you about that. I probably have to put that in the documentation, because it can be calculation intensive, going back and looking at all of those. But if you just put it on one chart or a couple of charts, it's not so bad. So as you can see here, right now, we set up there was a couple of these imbalances. Price kicked up, came back down, touched in, got rejected, came back, and you can see here how it keeps rejecting off of those. So in fact, I was thinking about renaming these something like the black hole indicator, because it seems like it'll suck price into it, but in black holes, once you get in, you don't get out. So that's why I didn't name it that. So I'm just going to keep the name the imbalances. And one of the things is, now as an input, you can change the label. So if you don't like the labels that are on there, you can put whatever you want. So fellow traders, that wraps up the week. Have a real fun, safe Easter holiday weekend. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.